In this video, traders, let's look at how to stagger your limit orders. Stay tuned. Hey guys, warm welcome to you. All right, so one of the things we have, one of the challenges we have as traders, where we put our limit orders, we don't know whether the market's going to go. Obviously, if we knew that, it'd be nice and easy. We just put full size on and then great, we'll make the trade. We don't know how far the market's going to go, whether it's going to come back on us, all these kind of things. So let's look now. I'm going to hit the screens in a moment as well, but how we kind of go through the process in our mind of staggering these limit orders. Do we look for a stretch target? You know, every time I look for a stretch target, the market always comes back on me. When I don't run it, the market runs off. So it's kind of trying to gauge the conditions and adjusting the limit orders to suit. Like I say, we'll hit the screens in a moment and kind of look through some actual chart examples. But one thing I want to show you here is, if you look at this supposedly random chart that I've kind of drawn, you have a few different scenarios. So let's imagine that you've bought on this double bottom. So imagining you've seen this kind of move, it's pulled back, you think we're going higher, and you've bought here, your stop's probably going to be below that low. Where would you put a limit? Now, without seeing all of this, the obvious thing is you might go, well, actually, I don't know if this high here is going to break, so I might want to take a big chunk of the trade off because, you know, we've nudged against that level. It's a pretty decent resistance level, all things considered, but I need to leave a runner. In that case, you might go, right, well, I'm going to do, you know, 90-10 split. I'm going to take 90% of my trade off there, or 70-30. I'm going to take a big portion off and then leave a portion to run. So in that particular instance, you've got that overhang of pretty heavy resistance. Yes, appreciate I've drawn it, it's broken through, but you don't know that at that point. You don't know that, so you might be taking a little scalp trade, a nice little 4-to-1 risk reward ratio. You stopped under there, you've got a good entry there, fine, and you're leaving a bit to run. If it breaks through, maybe then you're ratcheting your stop up. So that'd be one scenario. Another scenario, different type of setup. You've broken through this level this time. So imagine we've broken through the level, we've pushed up, now we've started, this is a classic entry, guys, that you know I love. Away, this is to kind of drive the first pullback move here, break of this. Let's say you're in on this, you've already seen momentum, right? So you're not like you're taking a little scalp trade up to the resistance off that double bottom. You've already seen it break through. That's gone clean through. Now it's pulled back. You're almost in a flag type scenario or first pullback scenario. It's broken through your long. Well, your stop's probably going to be under here. Where's your target going to be? Now, this is where your limit goes a little bit different. It's where you start to stagger it out and you'd say, right, well, actually, as we drive through that height, I want to take some out. I also want to take some out as we start to see the first kind of red candle. So I'm here. Maybe that takes out most of the trade. Now I want to leave a trailer that runs with perhaps a moving average coming up here. And you say, right, well, that last portion of the trailer, last 25%, last 30% of a trailer. So you're staggering the orders much more and much wider than you were in this type of trade. You're actually saying, okay, well, hey, I want to scale out into the momentum, I want to feed it out into those aggressive buyers because I don't know if it's going to snap back on me. So you're staggering much wider and much more in a different strategy than you were with this type of scenario. But then let's just think of this. Let's say this is now really, really extended and you're taking a kind of almost a bull flag type trade here, a break of this scenario here. How would you trade that? Well, you might say, well, hey, this is just the start of something huge. I'm going to literally have a really high limit order. I'm going to have a deeper stop. It's going to be much more extended. Or you might be saying, okay, this is where it comes. This is where you're kind of thinking the thesis of the trade, guys, is am I taking the very last bit of exhaustion? Am I waiting for an exhaustion move? Do I want to see literally it just blasting up there? And as soon as I see that blow off top, I'm all out. Maybe I'm back to the 90-10 rule. Maybe I'm like, okay, well, actually, I've got that exhaustion, bang, the trade's coming off, I've got a 10% trailer, fully expecting it to kind of come out and get stopped out. Or the other scenario is one of my favorite ways of doing it. Possibly that's a bit late for me if I was trading that. We'll look at the screen in a moment with some examples, but let's say you've gone in. One of the ways to do it is just to split the order into many, many small pieces. So let's say you're trading a 20 lot, whatever you're trading doesn't matter. The point is you're just literally feeding it out as the market goes up, especially when you're into that kind of move that's really, really a kind of a blow off top type move. You know, that works as well if you're breaking through lows. You know, often when you're breaking through those key lows intraday, you want to scale. It's one of my very favorite strategies, to scale into that, because you just don't know, especially trading something like the DAX, something that's very, very frothy. you're scaling into it because you don't know where it's going to go, and then you kind of say, right, well, scale while it comes. Then when it comes back, that's when I'll ratchet up the rest of it and pull the trailer stop in. So in this example here, you'd be scale, and let's say you've now got 10 lots left, for example, and then it starts to pull back on you. At that point, you go, let me pull that stop right up to the next level here, and then wait, and then it goes again, scale. Maybe then you've got 5 off, you've got 5 left, you might ratchet your stop up below that low here, that comes out, pings you out. So in that case, you're staggering your orders into very, very thin slices because you're trading momentum move that you don't know where it's going to end. So you've got very different type of scenarios. You've got the scenario that's very structured, and you go, right, the chance of it stopping at the resistance is probably quite high, but I still want the chance that this thing could extend through. So I'm doing a 90-10 split on my orders. Then I'm taking this trade, which looks like a good momentum type trade. I'm going to take out maybe 3 tranches in order. I'm going to have a fixed tranche just above that high. I'm going to have a tranche when we first get the first red candle, and then I have a tranche as a trailer. So that's slightly wider, slightly more structured, but we're not quite as aggressive blow off scenario. Here, big blow off scenario. Bang, I don't know how far it's going to go. This thing could shoot right up to the top of the whiteboard. Scaling out, thin slicing, some slicing out now intense, bang. When it pauses, ratcheting my stop up. If it goes again, bang. The best scenario is you run out of bullets. You're like, okay, I've scaled everything out and it's gone. And now if it carries on going, and that's a regular thing, that's something to adjust moving forward. But if it doesn't, you're fine, you've scaled out nicely. Your average exit is kind of way up here with a 5th trade is very nice. And all you've done is you've kind of embedded yourself into the market conditions and gone, right, I don't know where it's going to go, I'm just going to scale out as it pushes through. So 3 distinct type of ways of staggering your limit orders. Let's have a quick look at the screen, guys, and look at some of the real chart examples rather than the whiteboard type stuff, and let's see how we would implement this in some charts. Let's go. Alright guys, let's look at a couple of different examples depending on the setup of how we might stagger our limits. So let's say we had this DAX trade, right? Something that occurred the other day, we gapped lower, and actually it was a trade that in my mind, I didn't take this trade, but something that's out there that I know that many people were kind of trading or at least looking at. So you know, if you'd taken, okay, all hypothetical examples here, guys, full clarity, I did not take this trade. I'll show you one in a moment that I did, but hey, sometimes we've got to use some of these examples to kind of highlight exactly what's going on. So if you'd taken this kind of breakout type trade here, breakout type trade, you're looking for a gap fill, that would be a great example of when you would probably look to scale out 90% of your position there, because the thesis is only a mean reversion type trade. The market's come lower, market's pushed higher, market's broken out of here, market's tagged that. That's probably going to be almost all of your position. That's not going to be one you're going to stagger. Sure, you might hold a little bit just in case you got an extreme reversal, extreme runner, but if you're playing just for that mean reversion, just for that kind of pullback to there, it's a very definite target. It's a very difference in the way you trade it. Now if we look at something like Snapchat, a trade that I had taken after we gapped up on day 3, a bit of kind of background, guys, we gapped up massively on earnings. This is a 5-minute chart. You can see day 1, you know, strong. Day 2, it kept holding above this high, so there was a big resistance level here. Now I took this actually on day 2 as we kind of held above the highs here. I took it back here and I still held it over to the closes. I like the strength of it. Now this is one where you'd stagger out in batches because you don't know where this is going to go. If we put it on our daily chart just for kind of context here, look where we are. You know, we're at all-time highs, fresh highs. Who knows where this thing could run? $50, $60, $45. You just don't know. So this is a scenario where, let's go back to the 5-minute, you would be happy to stagger your order in batches of 10%, or 25%, depending on, you know, how you want to play it. So, you know, if you're trading this momentum breakout and next day you get a gap up, you know, after the first hour, take some off. Exactly what I did. Take some off after the first hour. Take some more off later. Take some more off. Feed it into it. Obviously, depending on your kind of time frame, what you're looking for from a trade. If you're a swing trader and you're looking for in a multi-day run, then you're not going to probably scale out until the end of the day, and then you take it maybe 10% off, then maybe another 10% off, and you scale out 10% per day and spread that limit over, because it's a real range expansion type trade, because it's a real momentum type trade, completely different from this kind of mean reversion type trade. Now of course,
If you're a longer term trader, yes. And your thesis is different, yes, this is why it's all aligned with the thesis. You might go, well, you know what, I'm going to take a small amount out because I want to hold this for multiple days and I think we're going to retest the highs on the daily. Fine, but if it's a day trade, intraday trade, mean reversion type play, then you're not going to be staggering just 10% out there because it's done what you kind of hoped it would do. When it's this type of play, range expansion, you don't know where it's going to go, makes more sense to stagger the orders into smaller batches and feed it out into the move. Now, some of you might disagree with me and might say, listen, I'm interested to hear what you guys got to say in the comment section below. But some people might say, listen, you've got to hit your target and that's it. But I think this strategy of chunking trades up depending on the setup you're taking and the thesis you're taking gives you a better chance of kind of getting on some of these real outliers as well, but at the same time still getting to hit those singles or those mean reversion type plays.